G'day legends, welcome back to the weekly breakout. I'm Mick Vitar, Michael's pixel perfect stand-in, holding down the fort while the flesh and blood version is probably out there chasing the perfect wave or debating the merits of oat milk lattes with his barista mates. Gotta love that human downtime. Quick disclaimer, this video is for education and entertainment only. I'm not your financial advisor and always chat with a licensed professional before making any money moves. Let's break it out. All right, legends, buckle up, because today we're diving into mortgage and finance mastery with a title that's going to make your wallet sit up and take notice. 4 hidden mortgage hacks to beat high rates in 2026. No cuts coming soon. The RBA just confirmed no rate cuts until at least 2026. But what if you could slash your mortgage payments starting today? With the Reserve Bank holding the cash rate steady at 3.6% as of November 2025 and warning that core inflation could stick above the 2 to 3% target band right through to mid-2026 or later, Aussie borrowers are feeling the squeeze harder than a barista frothing milk. Inflation's now forecast to hit 3.2% by year's end, and it's not dropping back sustainably until the second half of 2026 at the earliest. That means higher variable rates hanging around, with CommBank's standard variable sitting at about 5.59% per annum for owner-occupiers, and even their lowest advertised deals around 5.34% per annum after recent tweaks. No wonder household budgets are tighter than a wetsuit after Christmas. The problem? These high interest rates and sticky inflation above 3% into 2026 are crushing affordability, making it tougher for everyday Aussies to build equity or even keep up with repayments without some clever plays. We're talking reduced borrowing power, slower property market growth in some spots, and more folks at risk of mortgage stress. But here's where it gets interesting. Banks are feeling the heat too. Take Westpac. Their annual profit dipped to 6 billion Australian dollars for the year ending September 2025, down from 7 billion Australian dollars the year before, all thanks to fierce competition in home lending. That means lenders are scrapping for your business, creating opportunities for savvy refinancers to snag better deals. Let's break down the analysis with some real data. Pulling from CommBank's insights, variable rates have seen small cuts this year, but with no RBA relief in sight, borrowers' effective rates could stay elevated, impacting monthly repayments by hundreds for the average loan. Morningstar's reports highlight property hotspots like Melbourne and regional areas rebounding in 2025, but warn that high inflation borrowing could slow wealth building without smart tactics. Imagine this chart from CommBank showing variable rates hovering around 5 to 6% while inflation ticks up. It's not pretty, but it underscores why you need hacks now, not next year. So, what's the play? Here are 4 under-the-radar mortgage hacks to reduce your home loan costs without waiting for rate cuts, based on real strategies from bank reports and finance pros. These could save you thousands while padding your wealth in this tough climate. Hack 1. Debt recycling for tax benefits. Turn your non-deductible home loan debt into deductible investment debt. Pay down your mortgage, then borrow against that equity for income-producing investments like shares or property. The interest on that new loan could be tax deductible, effectively lowering your costs. Just run the numbers with a tax advisor. It's a game changer for building wealth. Hack 2. Negotiating lender credits. With banks like Westpac facing profit squeezes from competition, they're desperate to keep customers. Call your mortgage broker and ask for a rate review or cashback credits. Some are offering up to $2,000 to $4,000 for refinances. Mention shopping around and watch the deals roll in. Hack 3. Using offset accounts effectively. Link an offset account to your variable rate loan and park your savings there. Every dollar offsets interest, potentially saving you big without locking funds away. For example, $50,000 in offset could slash interest on a $500,000 loan by thousands annually at current rates around 5.5%. Hack 4. Exploring fixed rate switches. While variables are high, some fixed rates are dipping below 5% for 1 to 3 years. Lock in a portion of your loan fixed to hedge against inflation spikes, but keep the rest variable for flexibility. CommBank and others have cut fixed rates recently. Time it right for stability. There you have it, legends. 4 hidden hacks to beat those high rates in 2026 without RBA help. Implement one or all, and you could be laughing all the way to the bank. What's the biggest challenge you're facing with your mortgage right now? High rates or finding better deals? Share in the comments below. Smash that like button if this helped. And don't forget to subscribe for more breakout finance tips. Catch you next time. Let's keep breaking out of those financial ruts.